why do we pay so much tax? That lump sum deducted from salaries, that extra 15% on most of the things we buy. The truth is, tax is what keeps the country going. Tax revenue is individual and company contributions to the society that we live in. So taxes really can be used as a vehicle to improve society and have a healthy democracy. But most of us, despite paying taxes when we buy most things or from our earnings, know almost nothing about the taxes we pay. Let's have a look at different taxes in South Africa. Income tax. This is a tax levied or taken from income earned by companies, trusts, and other entities. It is calculated based on the taxable income and is subject to different tax brackets and rates. So, if a company makes a certain amount of profit, they will need to pay a percentage of that to the South African Revenue Services. Value added tax, or VAT. VAT is an indirect tax imposed on the things you buy and the services that companies provide. Currently, the standard VAT rate in South Africa is 15%, although certain items are not taxed. If you buy a fridge, 15% is added onto the cost for SARS. Capital gains tax, or CGT. CGT is used when entities or individuals sell their assets. Selling your home, or selling back shares you had with a company you resigned from, or selling your stock on the Johannesburg Stock Exchange. Did you make money off selling the asset? If so, the South African Revenue Services will take a percentage of that profit. It is calculated on how much profit you made, and there are specific exemptions. Pay as you earn, or PAYE. PAYE is a form of income tax deducted by employers from employees' salaries or wages. It is based on a progressive tax scale and the tax liability of the employee. If you earn more, you will be taxed more. Some people do not earn enough to be taxed at all. Dividends tax. Those great shares you bought and get a dividend payout, or company or entity that pays out, well, that will be taxed too. The entity declaring the dividend will take that money off the top before you are paid, and the current rate is 20%. Customs and excise duties. These are taxes levied on imported and exported goods. Customs duties are imposed on imported goods, while excise duties are applied to certain locally manufactured or consumed goods, such as alcohol, tobacco, and fuel. These are commonly known as sin tax. Estate duty. Estate duty is a tax levied on the estate of a deceased person. It is calculated based on the net value of the estate and is subject to various deductions and exemptions. So, when a member of your family dies and leaves you money, don't be surprised if SARS takes a percentage of your inheritance. Transfer duty. Transfer duty is payable when there is a transfer of immovable property, such as land or buildings. The amount is based on the purchase price or the value of the property and is paid by the purchaser. This is also something that needs to be considered when you're buying a flat, as it isn't included in the purchase price. Skills Development Levy, or SDL. The SDL is a tax imposed on employers to fund skills development initiatives in South Africa. It is calculated as a percentage of employees' earnings and is paid to the South African Revenue Services. Unemployment Insurance Fund, or UIF contributions. Every month, employers and employees contribute to the UIF, which provides benefits to employees who become unemployed, have reduced working hours, or go on maternity leave. The contributions are based on a percentage of employees' earnings. This fund can be a real lifeline when facing a serious life change. So there you have it, some of the main types of taxes that individuals and businesses are liable for in South Africa.